Everyone tells you to buy and hold. The media, financial advisors, the loudest financial voices on YouTube, they tout this strategy as the obvious and only real way to invest for the long term. They make it sound silly and irresponsible to worry that there may even be a chance that it's not the best strategy for you to protect and grow your assets. Well, they're wrong. Now, the buy and hold strategy is easy. So I understand that accepting the fact that they could be wrong comes with a lot of pressure and stress on your part. So take this as a warning. If you hear me out, are open-minded, and ultimately come to the conclusion on your own that the buy and hold strategy is not enough for you, that comes with a lot of stress and pressure to find a better solution. So if you're okay with that, let's keep going. Welcome back, you brilliant 18,000 subscribers. Now, a few of you may remember a video from a while back where we briefly explored the LTCM, long-term capital management financial experiment, that put the logic behind the buy and hold stock and bond only strategy to the test in the extreme, and how it ultimately failed miserably. One of the problems is that the assumptions used by the geniuses behind LTCM's strategy, those Nobel Prize winners Myron Scholes and Robert C. Merton, as well as the buy and hold strategy itself, is that these underlying assumptions are fundamentally flawed. They are predicated on the idea that the market will continue to do what it has done over the last 100 to 200 or so years, i.e. go up. The United States market has, thus far, always gone up. It's gone up since the beginning of our S&P data officially started back in 1926. It's gone up since the New York Stock Exchange, NYSE, was founded more than 200 years ago. No matter what happened, world wars, scandals, terrorism, depressions, we overcame, and the market continued on its destined path, onward and upward. It's a seemingly easy point to prove. Advisors will point to that trusty statistic, myself included, back in my earlier unquestioning days, that shows that given a long enough time period, 15 years now, it used to be 10 years before 2008, the market has always recovered. That logic seems sound enough. But then again, this would be true with anything that's on an upward trajectory, as long as you pick a point before that thing is coming back down. The trend of all past data will imply upward movement ad astra. Study the chart pattern, for example, created from tracking a millisecond by millisecond analysis of the height of a helium balloon released outdoors at a child's birthday party. For the most part, the balloon is moving farther and farther from the ground. There is, however, an occasional gust of wind that, depending upon its strength, will push the balloon downward to varying degrees. Plotting the balloon's height against time in this way might reveal a chart like this. The clever child scientists might deduce that the balloon will obviously continue this trajectory forever. Why wouldn't it? After all the data suggests as much. Of course, we know this won't happen, although perhaps we spare the child, allowing their imagination to run wild. We know that at some point, our inspirational balloon will hit an all-time high, never again to return. For the balloon, Archimedes' principle stands in the way of our dreams of seeing it drift off into space. At some point, new outside forces, a different makeup of the surrounding air, will act on the balloon, dramatically impacting its ability to continue its ascent. If you were just looking at that chart and knew nothing of science, you might be surprised to learn of this drastic change. History is full of trend-changing surprises like this that have altered the course of our world. The early Egyptian Empire controlled the most valuable land in the known world. They had secure borders and strong diplomatic ties. They were experiencing unprecedented prosperity. I don't know why they would have exactly, but if the occasion arose, it's not hard to imagine an advisor to the pharaoh pointing to their more than 3,000-year uptrend in prosperity and boasting something like, "Since the dawn of time, Egypt has been a dominant nation. Sure, there have been bumps along the way, but we always rise up stronger than before. There is no reason to expect that we will not forever be the world's most dominant superpower." Mentally picture yourself in Rome at the height of their power, roughly AD 117. How easy do you think it'd be to imagine a world where the Roman Empire did not reign supreme? They had one of the most formidable militaries the world had ever seen. Their population grew to more than 20% of the world's inhabitants. Can't you picture the advisors to the newly appointed Emperor Hadrian inspiring him with facts like, for more than half a millennium, our nation has grown ever dominant. Our military is unstoppable, and our people love us. At this pace, we will rule the world in no time at all. Imagine witnessing the conquests of Genghis Khan across early 13th century Asia. Through military, political, and economic genius, the Mongol Empire grew from nomadic tribes to the largest contiguous land empire ever in the history of the world. Experts of the day could have easily claimed, united for only a few short generations, and already the Mongol Empire spans more connected land than any empire ever. After winning hundreds of battles, the data are clear. Nothing can stop them. The British Empire in 1920 held sway over 23% of the world population and claimed 24% of the Earth's total land area. Their growth to this point was supported by roughly 4 centuries of data points. The uptrend was dramatic and undeniable. Experts might have easily pontificated, for centuries we have expanded our world dominance, despite major setbacks along the way. American independence. This last century we've been a global hegemon, with our unrivaled navy prowess. Clearly nothing can stop our superiority. Should have tried a British accent there. No, probably not. For most of these examples, far more data than we have for the US stock market today could have supported these claims. Hundreds and thousands of years worth of uptrending statistics to prove them. Yet, the Egyptian empire lost its superpower status far quicker than it was attained, and has yet to get it back. The Romans' fate was only downhill from there, with their capital ultimately being torn to pieces by barbarians. Unforeseeable forces led to the passing of Genghis Khan and the abrupt rupture of the Mongol Empire. And that point in 1920 marked the all-time high of the British Empire's reach. These worldwide, future-impacting changes all came about by events that were unexpected, things that had never before happened. Clearly, historical data does not guarantee future results, no matter how much data you have. Decades, centuries, or even millennia of convincing data can be wrong. This video is just one small piece of the case I make for you to make sure that you truly understand the way you're investing your hard-earned money. In fact, it's just a small part taken almost word for word from my Myth 10 in my book, Stop Investing Like They Tell You. Here's a link to the full playlist I'm creating for that incredibly important myth. And here's the next video in that series, if I've made it yet. I sincerely hope these videos and the book help you understand my concerns here and ultimately help you become a smarter, more prepared investor. I wish you all the best. Take care.